Hello and welcome to another financial analysis video. Today I want to talk about Frontier, and I've talked about Frontier before. They released earnings today and they beat by 4 cents. They actually came in at 3 cents a share versus an expectation of a loss of 1 cent. And, Frontier's an interesting story because they have such a high dividend yield of over 8%. And I did a video a few weeks ago in which I said that I believed Frontier's dividend was sustainable. Now, in light of some recent information, I just want to take another quick look and see if I still feel the same way. I do believe, as I said before, that the payout ratio for Frontier really is irrelevant. They're going to pay out the dividend based on cash flow. Now, they've increased the number of shares issued in the last quarter. This is likely due to some of their operations in terms of acquiring some Verizon assets. With that being said, I want to take this recent dividend payment and multiply it by 4. So instead of $400 million in dividend payouts, I think they're going to do about $480 million in dividend payouts. And if we compare that to free cash flow, we see $470 million in trailing 12-month cash flow. So now we're getting to the point where Frontier's dividend sustainability is beginning to become compromised. We saw previously that the payout ratio, obviously, off the charts. We don't really use it. But something else I like to use is I take the dividend yield and multiply it by the price-to-book ratio. That's another way of us getting an indication as to what the return on equity should be, and in this case 7.2%, to cover the dividend. And while Frontier has been near that level for a while, they've really dropped in the last 2 quarters and now are carrying a return on equity of 2.44%. And again, this has come from growth in the balance sheet. So I'm really starting to get worried about Frontier's dividend. They've cut it before, and I think they're on the verge of cutting it again. So I just want investors to be aware of this, and I think people need to keep an eye on free cash flow and stock issuance. 1.16 billion shares is a lot different than a billion shares. So issuing more stock creates a larger dividend burden. I hope you enjoyed this video. Happy investing.